Welcome to the deep dive video update. This is a video that I do once a week in addition to a number of different videos. I do a video each day. I do a weekly video. I do an intermarket analysis video. Then I go through all the charts, some that are just unique to this video, even a few weekly charts here and there. And I pick out the charts that really aren't speaking loudly right now. And that's why I call this the deep dive video. We have to look a little bit deeper to see if some of these other charts are telling us something in addition to what we're seeing in other charts. Then I put them together in this video and just to provide a bigger picture of analysis as to what's going on in the market currently. This is being prepared for Monday, June 10th. Please be aware that the SPX investing program has now launched. There is a link to not only learn more about the program, there's another link that can take you to the website to actually give the program a try. It's free for the month of June. Probably in July, I'll be locking that down. But for right now, feel free to go check it out. It's completely free. The only cost is an email address. If you don't really want to become a member, just unsubscribe, and that takes care of that. So give that a try. If you do have some questions, please feel free to email me at the email address right here. If you want to keep things more private, you can also put a comment on either YouTube or Rumble. The first chart that we look at here is a chart of the VIX, but the VIX is invisible. This is a 50-period moving average, which gives us an idea of what is the longer-term range of the VIX. We have been coming down, setting a lower range as stocks have been going up. Typically, this range will go higher when the market's under a lot of pressure. It'll go down lower when things are more positive. We also want to keep an eye on what is the speed of the VIX, and I use an RSI based on 9 periods to measure that. We look for extreme positive or negative readings. Right now, we're not getting anything, so there's been no need to show this chart. We also look at the VIX, and then there's another attachment to the VIX called the VVIX, or the VIX of the VIX. And then I do a ratio between the two. As a general rule, when this ratio is going down, that means stocks are going up. When this is going up, that typically means stocks are going down. We are tending to go down with this longer term, and that's more positive for the market. Then I look at a correlation between the VIX and the S&P 500. When we get up to a really high reading, that means that the market is kind of nervous. And sometimes we may not be seeing that in the VIX itself, but we might see it in this chart. Right now, we're getting pretty low readings, so there's been no need to show this. Then we have a thing called the MOVE index on top, which measures the volatility of bonds. Then in the middle, there's the VIX, which measures the volatility of stocks. I have some studies down here between the two. What I mainly pay attention to is the correlation. Right now, the correlation between the volatility of stocks and bonds is pretty much neutral. Sometimes this gets pretty high, sometimes it can get pretty low. So we're not really getting any insight from this chart right now. This is another similar measure to the VIX, where the VIX uses at the money options to do its calculation. The skew index looks at out of the money options. And we were following this chart pretty heavily last week, where we started to go up into this red area. And then as we really started to shoot higher, this really came down. And what this says is that the market is expecting some kind of a big move. We're not really sure if that's an up move or a down move. It ended up being an up move in this case. And now since we're back down to a neutral reading, I haven't been showing this chart. Then we look at a ratio between the volatility of stocks and the volatility of bonds. We're dropping below the moving average. As a general rule, when the red line, this moving average, is going down, that's more positive for stocks. When it's going up, that can be more pressure for stocks. We were bouncing all around here, but for the most part, we are starting to go lower as stocks remain positive. We look at high beta stocks and compare them with the equal weight of the S&P 500, and we call this a risk on versus risk off ratio. When this is going up, that's more risk on. When this is going down, that's more risk off. We've been trailing off a little bit in 2024. We're not seeing any real big moves with this ratio, so I haven't been showing the chart. but this is going down, showing that the broad market is actually showing more participation in the upward moves that we're seeing. We look at high beta stocks versus low beta stocks, and we're just chopping around for most of the last couple of months. We've been pretty much range bound in 2024. Sometimes we look for big up moves. That means that the high beta stocks, these are the ones that outperform on the way up. Unfortunately, they also underperform on the way down or actually go down faster. And that's when we see this ratio really going down. We're not really getting much insight from this chart currently. This is how far above are we from the recent high that was just set this past week with the S&P, with the previous all-time high set in early January 2022. Right now, we're 10.97% above that previous all-time high. Stock Charts has this thing called technical alerts, and this is for the whole week. I also break them down every day in the daily videos. When it's red, that's negative. When it's green or blue, that's positive. And we saw a pretty good up day on Wednesday. On Monday and Tuesday, things were more negative, and we're just seeing different things along the way. I mainly just look at this at a whole, and if there's a lot of red, we're probably going down. If there's a lot of green or blue, we're probably going up. Then we look at five main indexes, the S&P, which is the foundation of everything I analyze. But in addition to that, we keep an eye on the Dow, we keep an eye on the NASDAQ 100, the small caps and the mid caps. And then stockcharts.com rates them on a technical score from 0 to 100, trying to remove as much emotion as possible from the chart so that we're not subjectively looking at what's going on. We're more objectively looking. And we rank these looking at the best chart first and then going down to the worst chart and continuing to be in first place of the QQQs. When we're into the 90 range, that's typically pretty strong. So from a technical perspective, the NASDAQ 100 is looking pretty solid right now. In second place, not far behind it, in the high 80s at 88.8 is the S&P 500. Then in third place are the mid caps, which had been stronger, but you can see where they're starting to trail off. They're at 51.3. Then we have the Dow, which has really been under a lot of pressure after setting a recent all-time high. It's coming in at 43.7. And then we have the small caps, which have been a real disappointment in 2024. They're in last place at 35.5. Now, some short-term charts. This is a rainbow where I try to soak in the beginning of this chart and the end of this chart all together to get a bigger picture perspective. But this measures these lines here according to moving averages. We go from 10 periods up to 50 periods. We're above the rainbow right now, so the short-term trend continues to be positive. This is one of our shorter-term oscillators that we use. And typically when we get moving in one direction or the other, this will be extreme positive or negative. It's not giving us that right now, so I haven't been showing this in the video. If we see an up move or down move, this chart will come right back into the daily videos for sure. This is the boom indicator. We want to measure where is price in relation to a 20-period moving average, then a 50-period moving average, and a 200-period moving average. When we get far away, price has a tendency to bounce back or boom back to the moving average, whether it's above or below. We're not getting an extreme reading in the 20. And that the reason why I include this in the short term is that's what we usually hit first. Then the 50, that's intermediate term, and then the 200 is long term. So we're holding up here, but we use this like oscillators looking for extreme positive or negative readings, but we're not getting any of those right now. Intermediate term rainbow chart going from 50 periods up to 100 periods. Even when we were pulling back, these lines kind of started to roll a little bit, but never started to cross over each other. And so this is showing that the intermediate term continues to be positive. We want to keep an eye on the 100-period moving averages. We're well above that right now. We're dealing with the 20. And then if we start to see some weakness, we'll deal with the 50. If we break below that, then that will be when we start to deal with the 100-period moving averages. This is the Connors RSI. I actually showed this earlier in the week. We see really wild readings from day to day, but we don't see extreme positive or negative readings very often. We did get one after that real nice up move that we saw, but that didn't last very long. This is the CMB composite. Also in May, we were getting an extreme reading for a number of days. We are positive now, but we're not at this black line yet to get an extreme positive reading again. Bollinger Bands, this type of study uses a percent B indicator, and this just measures when we're above or below one of the Bollinger Bands, and we're not right now, so there's been no need to show this. A point and figure chart, no new X's or O's were drawn this past week. We're still working off of a double top breakout that was generated on May 15th. Here's an anchored moving average where we're well above the moving average going back to the previous all-time high. So there's been no need to show this chart. This is different from a regular moving average where a simple or exponential moving average uses current price and then goes backwards to calculate. An anchored moving average, the idea is that it actually is projecting forward. We are well above the 200-day simple moving average. That's why we're green right here, just showing that the long-term trend is positive. And here's the 100 again. In case you didn't see it the first time, now you get another free look here. Standard deviation attempts to measure the speed, not necessarily the direction, just how fast are we going up or down. Even though we've been ticking back up, we're still below the moving average. And this goes over the last 10 periods, showing that we're not really speeding really quickly right now. We look at the S&P 100, which is doing quite well now and coming off of recent all-time highs. We compare it with the S&P 500 on top. What we're looking for is any real negative divergences, but we're not seeing any right now. They're tending to confirm each other. This is a measurement going back to the low set in 2023 in October, and we've been able to bounce up off of that, and we're about 23.25% up off of that low. The mass index was generating a signal back in May. It's since gone away, and it's not generating a signal now. Pring bottom fisher. This tries to figure out when we've been really going down, and we may have established the bottom, and then we come up out of that. We were riding this signal, and it gave us a pretty solid signal as we were going up in May. But since we dropped below the moving average, this signal is not being generated now. This is not a negative signal. It just means the buy signal has now stopped. Ichimoku cloud, when I look at it this way, we just use it as support when we're above the cloud. When we're below the cloud, it may act as resistance. Then I do a full study of the Ichimoku cloud, a little bit shorter term. We see where the blue line is above the red line. That's positive. And price is above both of these lines. That's also positive. And the green line, which is a little bit behind, this also is showing that things are positive currently. Then we have a long-term rainbow going from 50 periods up to 250 periods. We're well above the rainbow. So the short, intermediate, and long-term, according to our rainbow charts, continues to be positive. This is the special K daily chart. We don't get a lot of signals from this, so I only show it in this video for right now. If we start to see a cross above or below this red line, then that's when I show it in the videos each day. Here's a weekly chart of the S&P on top and the weekly chart of the German DAX. And they're having a fairly strong correlated relationship. Doesn't mean direction. It just means they're probably both going up or both going down at about the same time on a weekly basis. Then here's a mini rainbow. It's really just a simple indicator based on the 20-period simple moving average of the open, high, low, close. We were watching this as we were pulling back in the latter part of May, but since that time, we've come back above the rainbow and the rainbow's going up. So until we come back down to the rainbow, there's been no need to show this chart. The fib retracements, and I haven't adjusted it here. This is from the previous all-time high. This comes into play if we really see a decline and we look at these different retracement levels. Look at the Qs, and I was showing this every day. It was mainly to see were we going to cross back above the blue line, which is a 20-period moving average, above the 50. That happened, and we're well above based on price. So I stopped showing this in the daily videos. And we look at the volatility of the VIX, called the Vixen. And there's a lot of crazy data up here on the bar chart. I mainly follow the line chart down below. This goes down as the NASDAQ 100 has been going up. Here's the bank ETF, which has been chopping sideways, but it's still in an uptrend. We also do a ratio between the regional banks. These are the smaller banks, and these are the ones that, like Silicon Valley Bank, Republic Bank, New York Community Bank. We're just keeping an eye on these things to see if there's any problems. But right now, the regional banks continue to underperform the financial sector. And we look at the S&P on top, and then a ratio between the Qs, which is the NASDAQ 100, and the Dow, which is the bluest of the blue chips, seeing that they're having a fairly strong correlated relationship looking at this ratio compared to the S&P. So they're pretty much confirming each other. The transports have been a real disappointment. The Dow is coming off of recent all-time highs, even though it's been under pressure lately. But the red line are the transports, and they are just underperforming by quite a bit. We look at the large caps as denoted by the Russell 1000. That kind of equates to the S&P 500. And then the Russell 2000, which are the small caps. When this is going up the way it is, it just means the large caps are outperforming. We're not seeing any real drastic moves here, so I haven't been showing this chart, and it kind of confirms what we're seeing in other charts. Then this is something that it kind of comes in and out of the daily video. This is the Amex, NASDAQ, and NYSE. So very broad market look. And then we take a 5-period moving average of the highs minus the lows. Even though we've been dropping back, we're still above zero. So when this is positive and going up, that means we're seeing more broad market strength. Couple of rate of change charts. I just use these for informational purposes. This is just going back 250 periods to see how we've changed. Here's a longer term look at that same chart. It's not quite up to the blue line yet, but since the latter part of 2022, when we hit that bottom, we have been going up in the longer term. We look at bonds, and there's a lot of different bond charts that I use. This one isn't as pronounced, so I haven't been showing it in the videos. This is TIPS versus 3 to 7 year bonds. When this is going up, that means there are inflation worries and interest rate concerns. When this is going down, those fears are subsiding. We are going up here, but with some of the other charts that we follow, it's going up a lot stronger. This one is just kind of going up, not as much, so I haven't been showing it in the videos. Then we have the correlation between the long-term bond ETF based on price and the S&P. And their longer term correlation is pretty strong based on 50 periods. And their shorter term correlation based on 10 periods, it's strong, but not as strong as it has been in the past. We look at the correlation between the Qs, that's the black line, which is the NASDAQ 100, and the long-term bond ETF, that's in red. And their correlation is also fairly strong, meaning that if the NASDAQ 100 is going up, the long-term bond ETF is probably going up as well. And that can also mean they're both going down at the same time. And we have an interesting chart here. We take the 10-year yield in the US and we subtract the German 10-year yield. Since US rates are higher, that gives us a positive answer. Well, then we plot the US dollar index in the middle, and we can see here the interplay between interest rates and currencies shows that the correlation between the two is kind of strong right now. So if one is going up with this measurement on top, probably the US dollar index is doing about the same thing at the same time. And that can be either up or down. We keep an eye on the yield curves, which still remain inverted. We mainly follow the 10 to the 2 and the 10 to the 3 month here. And then I have a number of things called possible positive scenarios. Some of those charts are really helpful when we've been going down. They were really helpful in 2022 as we were going back and forth from positive to negative. Well, these charts are also useful on a day in and day out basis, but these charts that I show here, they're not really telling us all that much right now. These are the percent of stocks in the S&P 500 that are above their 200-day moving average. We use this like an oscillator. We look for an extreme positive or negative reading, and we're above 50, so we're positive, but we're not seeing an extreme reading. We do that same basic thing with the S&P 500 and then compare it to the 50-day moving average. Also looking at this like an oscillator, and we're actually a little bit below 50. That's slightly negative. There's other charts that I've been going through in the daily videos that are also showing this weakness. And we look at that same thing with the mid caps, where they're also dropping below 50. That's more negative. And the same thing with the small caps, which are showing even more weakness currently. We keep an eye on the S&P 500 and compare it to the 2-year Treasury yield. Sometimes when this 2-year yield spikes up and then comes down, that will give support to the S&P. We haven't really spiked, at least at this time. So thank you. I really hope you found this helpful. Please feel free to check out the other videos that I post, as well as the SPX Investing Program site to see if you like the program. I hope you're having a great weekend, and I will talk to you in the next video.